All right. Good morning, good afternoon, good evening to you, wherever you are in this beautiful world. Welcome to our Tuesday evening Inner Circle Live session. I'm your host, Ryan Carthage. Hope everybody has had an awesome day and ready to get started. So, as always, let's turn off all distractions, grab a pen and paper for notes, and let's participate and engage. All right. So, we will take a look at the fundamentals to see how that inflation report came out today. Then we will take a look at the markets. We'll look at what the reaction was, and we'll take a look at some setups that we have available for us this evening. Let's dive in real quick. Just drop me one in the chat if you can hear me. Okay. Um, Interesting changes with my mic today. Can you guys hear me? No. Give me 1 second, folks, on YouTube. Ah, shoot. Okay. Give me 1 second. Can't hear me. Can't hear me. All right. Let's see. Stop the share. Give me 1 second. Test, test, test. What's happening here? So without further ado, let's hop over to Forex Factory, take a look at what I'm sorry, not Forex Factory, but Trading Economics to see what they have to say and see how things shook out for the day. So, U.S. inflation rate eases to 6%. U.S. annual inflation rate fell to 6% in February, the lowest since September 2021. And in line with market expectation, adding to signs inflationary pressures are easing as a result of the Fed's tightening campaign over the past year. Core inflation, which strips out food and energy, edged down to 5.5, the lowest since late 2021. All right, so we do have some signs of things slowing down. So that brings into question, will the Fed continue their rate hike? Right? Will the Yes.
Sorry to interrupt you, but this is Brandy. I was on YouTube, and when you switch whatever, no one can hear you on YouTube.
Can't hear me on YouTube anymore?
Just wanted to let you know, yeah, because I switched off and came on Zoom.
Okay. Okay, I appreciate it. Let me make a couple changes there. Appreciate that heads up.
No problem.
All right. I'm not sure what changed in my audio this evening. It's really weird. It happened earlier, and I thought I corrected it. Um, let me see here. All right. I think I got the audio back there now. Thank you, Brandy. Appreciate that.
You're welcome.
um, so inflation eased, right? Investors now have somewhat of a positive or more positive feeling about where things could go next week when the Fed comes out with their interest rate increase. Right, Fed Chair Powell talked about a potential 50 basis point hike. Some officials from the committee also talked about a potential 50 basis point hike. We'll see now how Fed Chair Powell comes out. This was the last data point that they're waiting on to then go into depth on their conversation about those interest rate hikes. So we will see how things transpire. But US, going to this next article here, U.S. futures ease after upbeat session. Right, U.S. stock futures eased on Wednesday after the major averages posted strong gains during Tuesday's regular session. Right, they were a little more positive about the overall outlook um, with inflation easing. Right, um, futures contracts tied to the three major indices were all down by 1%. In regular trading on Tuesday, the Dow gained 1.6%, the S&P jumped 1.65%, and the Nasdaq Composite rallied 2.14%. Right, with all 11 S&P sectors finishing higher, led by communication services, technology, and financials. Investors were betting that the worst of the fallout from the collapse of Silicon Valley Bank and signature banks had passed. The market also digested the data from U.S. annual inflation slowed further to 6%, in line with their expectations. So investors now look ahead to retail sales and producer price index on Wednesday, as well as earnings reports from Adobe, Five and Below, and Oatly, and others. So more upbeat because of that data, right? So that was big news there. Uh, Crude slid 5% to $71 a barrel. Um, Treasury yields rise after CPI. Okay, so we got some interesting movement in the charts, but on the currency side, we did see things push more a little bit out of the risk off scenario for at least the short term. All right, so let's hop over to the calendar, right? And CPI data came in there in line with expectation. The core CPI um, was just above the expectation there. And tomorrow we have annual budget release for the pound. Then we have core PPI retail sales, which also they'll be looking forward to just to see how much people are still spending. Empire State Manufacturing Index, PPI month over month, and those retail sales numbers. So tomorrow we'll have some data that we'll also have to digest. But this was big news there, and we'll see if this falls in line with what came out today. We also have for the New Zealand GDP quarter over quarter, and we have unemployment rates and employment change for the Aussie as well tomorrow. And then on Thursday is when we have the rate for the ECB. So we'll take a look at some euro pairs as well, see what's happening there. All right. So that's really the overall look for the rest of the week. Let's hop over to any questions from a fundamental perspective. Nope. All right. Appreciate it. Let's hop over, take a look to see what the dollar did, how the dollar responded. So, got not much of a reaction. Got a little push to the upside, but came right back down, and the dollar pretty much stayed in the range. Right. So, what we could potentially see from a DXY perspective, we'll see how the retail sales numbers come out tomorrow. But Thursday could be really, really important for the DXY with that ECB interest rate conversation. with the DXY. It's heavily weighted by the euro. I think it's something like 60% weighted by, or yeah, I believe it's like 55 or 60% weighted by the euro. So that interest rate conversation is going to be really important in how the dollar moves for the rest of the week. So pressing sideways, so we could see the DXY continue to press sideways um, through Thursday in the ECB conversation. So we'll continue to monitor to see. We'll also take a look to see how the market opens in the morning after those numbers were fully digested when it comes to the CPI data. Right, we could potentially see more of a push to the downside, maybe at least back to retest that daily support level. If we break that daily support level, take that out. If we break that daily support level, right, we could head to 12,767. All right. So got a little bit of work to do there, but overall, the DXY was sideways. We had some more reactions in some other pairs. So we'll take a look at those. So that's the DXY. Over to some of our pairs. Take a look at that dollar Swiss. Benny talked about it this morning. And so we had that push down. This is on the 4. Let's come back to the daily. Right, we pushed down to retest this daily support level, right, 95.91, and we're looking at a potential retracement and push back to the upside here on this dollar Swiss. So we come down to the zoom out here. Going to run the fib on this one to the downside, right? And we see on the daily time frame, we got an 80-20 scenario here, right? We had the strong pushback down to the downside, retested that support level, double bottom here, right? And now we're looking to see if we get price to push back to the upside. Okay. Now with things moving a little bit out of the risk off scenario, the dollar in this case is being utilized as more of a risk asset against the Swissy, right? Benny talked about over the weekend and last week how the Swiss franc has been used more as that risk off currency, and things have been pushing to the downside for the most part against the dollar, right? And so as things start to shift, we could see this pair start to shift in favor of the dollar, and the dollar being looked at as that risk on currency here. So looking for that retracement to continue there. So as we come down to the 4, look at this from a couple perspectives. Run the fib off the high here, right? And we see we did get a 50% push here, but price came right back down to that weekly support level and was not able to break through that level. Okay, and we're getting that reaction now. So what I did was I ran a fib off of this last high to the downside. We'll see this a little bit better on the 1 hour time frame, but this was a fresh AB boundary here, looking for the retracement back to the upside, at least coming to the 618 level, retesting this level of previous support right here. Okay, so looking for price to rise a bit, come back to that level, and then we'll see if we get price to continue to the downside, heading to that D extension here at 90.037. Okay, so as we continue to move down through the time frames, get to the 1, right? And this is what that looks like on the 1 hour time frame. Come back here real quick, running off the high just to make sure I didn't miss anything. Yeah, okay. So similar to the 4 hour, right? 50% retracement, trying to make to the D extension, got held up there, running those sub fibs off of that last high, that last impulsive leg. And we got that fresh AB boundary at that weekly support level right here. Okay. And then we got some consolidation, pushed down. This was the move at the 8:30 hour to the upside. Got a little bit of a pullback. So we'll see now if through the rest of the week we get some follow through and price continues to rise to the upside here, making those higher highs and higher lows, getting back to that 92,858 level. All right. So that's what I'm looking for here. And I'm playing this off that low to the upside. We'll see if we get to that level there. Okay. But it's the 80-20 on the daily time frame that we're ultimately looking at for a move back to the upside there. Okay. Now, as things continue to shift and move, as the dollar, if the dollar gains strength again, we could continue to see that follow through and the dollar continue to rise if we get that move back to the upside on the DXY. Right. So that's the dollar Swiss. Any questions here? No. Let's see. Nope. All right. Cool deal. Appreciate it.
No, I was just looking at the investing.com. That's my new.
That's your new best friend, huh? You can confirm this retracement here to the upside.
Yeah, on a long time frame.
Awesome. Appreciate that.
Mm-hmm.
All right. So we'll continue to watch and see how that one moves. And see how that progresses over time. All right. Now, the other thing about, because I want to look at some of these Swissy crosses as well, because as we move more out of that risk off environment, right? Those Swissy crosses, your CAD Swiss, your Euro Swiss, those also are starting to shift as well. Those are at key areas, and now we're starting to get U-turns in those as well. So we'll take a look at those and see how those move. Over to the euro dollar. Just want to get an update on where things are. From a daily time frame perspective, right? We saw this push to the upside here. Had that support level last week. Price was rising, and through today, we got a push to the upside. Had a little bit of indecision here, right? A little bit of indecision, and now we're just pushing sideways here on the euro dollar as well. All right. So as we move down through the time frames, we'll continue to see some of that indecision, right? So here on the that's not the 4 hour. There's our 4 hour, right? So here on the 4, we had this push to the upside yesterday, a little bit of a pullback, right? And then through the morning, we pushed up, and then we started to move sideways. So just stalling, similar to that DXY, right? Yeah, Joy, I'm with you. We're gonna take a look at that CAD Swiss. That was a nice setup there. So now we're just ranging a bit, right? Came back and retested this level that we broke through, and now we're just ranging. So as the week moves on, right, and with the ECB, as we know, as of now, still hawkish, right? We could see this push to the upside, especially if they come in with 50 basis point rate hike or higher, right? We could see this continue to push to the upside, getting us to this 118, 127 zone in this weekly resistance level. When we get here, we'll have to watch to see, right? Does this level hold, and do we get price to then come back down, play this 80-20, right? Or does price break that level and continue to rise? All right. So that'll be something for us to watch come Thursday. Okay. So as we move down to the 1, we had some back and forth on the Discord as we're looking at the fibs here on this Euro USD, and when we're mapping out our fibs on when we're doing it manually, we want to make sure that we draw them properly, right? And how you draw them properly as we look at this. And I'll map out the smart fib on it as well, but I want to illustrate the drawing of the fib. When you start at your low, right? We'll do this here, and then I'll show the example on the 5-minute as well that we're talking about. But you want to start at your low, and then you go to the first swing high, right? So in this example, your first swing high is here, right? The first swing high is here. Zoom in on this a bit. Right? So you go from your low to your first swing high. This is your center point candle here. These are your 2 candles to the right, and these are your 2 candles to the left. It's not pretty, but that's your 5 candle formation there. So your first fib on this 1 hour is really, really small. Right? That's your first fib there. Okay. Now your second fib goes from the deepest point in between the AB boundary, which is here. This middle candle here, you can't really see it, but this middle candle right here is your deepest point. Let me double check that. Yep. Your deepest point in between the AB boundary, right? And as price pushed up, right, that was a 50% 618 retracement. This wick took out that D extension, right? Hit that D extension, then came back down. Okay. So now your next fib is going to start at that low point, which is here, and go to here. Now, what's interesting about this, because this move was so erratic, it also took out your A. Whoops. It also took out your A, right? So now this fib has been invalidated because your A got taken out. Okay. So now that comes out, and your next fib starts at this low and goes to your next swing high, which would be here, right? So you go from your low, and technically be in between the AB boundary. This one would actually be really, really, really weird because you had that push up there. I'm going to see how the smart fib draws that. Yep, took it out. And then the next one goes, yep, goes there. That's what I thought. Okay. So your next fib would go from here to your next swing high, which is there, right? Even though that wick is really, really weird, right? This is your new AB boundary from the low to the first swing high. Okay. And so you literally follow this process all the way to your high, right? So now this is your swing low here. Pull that out. This is your low point, right? And we want to look to see where your first swing high after the D extension was achieved, right? So the D extension was achieved off of the 618 retracement. The extension was achieved on this candle here, right? Your two candles to the right occurred there. So your next fib then goes from here to here, like so, right? And now you find your C again, deepest point in between the AB boundary, 618 retracement, the extension on this push here, the first swing high didn't occur till here. So this is technically your D, right? And your D becomes your new B. And your C becomes your new A. So that's your A, that's your B. Right? So now these fibs are starting to expand a little bit. So now this is where we are. Okay? It's your AB boundary, 38.2. Price is trying to make its way to the upside. Right? So that's how you draw the fibs manually, walking your way through your chart. Right? Now we can run the smart fib and we'll see it all expand out, and that makes it easy, but you want to make sure that you draw them correctly so that you're getting these measurements accurate to ensure that your matching D extensions are in line, right? And you get your B boundaries in line, because you'll get times where, and people are originally taught, take it from the low to the high, right? And you miss out on all those moves in between. Okay. The gap it's just missing candles, right? So that's still price action to the upside. When we look at the lower time frames, you have candles in there moving to the upside still. So you just factor that into the price action to the upside. But people will tell you take your fib from the low to the high, but you miss out on all these smaller waves to the upside. So then when you get some of these moves that really push, you'll get stopped out of the, let's say, market manipulation, but ultimately it's just the fib moving in the waves that we know that it moves in, right? So you want to make sure that you map those fibs out step by step as you're moving through, all right? So that's how you map them out. But we're sitting at a high here now on the 1 hour, and let me refresh here. And now we want to see if we get price to continue pushing to the upside to get to that weekly resistance level, okay? I want to see if we get price to push to the upside. So let's map these back out there, right? And this one shifted it over to this next high. It should be on this one, right? Not sure. The algorithm got that one mixed up. But either way it goes, right? Price is still pushing to the upside. Okay, here it says we have a shallow retracement, but we should be at a 38.2 retracement, right? So don't be surprised if this $0 continues to rise to the upside to get to this D extension and this weekly resistance level. All right. So did that make sense in mapping out the fibs manually? Because there's a lot of folks that use Smart Trader or that are drawing them manually here in I'm sorry, use Trading View. A lot of folks map them out manually as well. All right. So cool. So watch for price to continue push to the upside to get to that weekly resistance at 107.875. All right. As we come down to the time frames, come down to the 5. This is the example that we're looking at on the 5 in the Discord, and the fib was drawn like this. It was something like this, and it was in the middle of a candle, so we didn't have a swing high either. So we want to ensure that, right, we map these out one by one, right? First fib will come there, swing high, low point, 786 retracement, first swing high after the D extension, the hit is there, right? So we map them out one by one all the way through instead of just going from the low to a high, right? And some random high. We want to make sure that we're mapping those out properly. Okay. So as we map them out with the smart fib, there you go. Right. And you see that you had 4 fibs within there, and then this crazy reaction took out the A. Right. So then when that A gets taken out, you flip it and mark it from the top down until those get taken out. And that got taken out when price pushed back to the upside. Right. Yeah, we did get that move to the downside, but right, we want to ensure that we get our measurements accurate. Right. And now we're looking at this fib to the upside here. That push up got to that D extension. Our new fib would look like this. Right. So that's our fib on the 5-minute time frame. We got a 50%, just shy of a 618 retracement here, looking at price potentially pushing to the upside. Right. So all of that is in line with that higher time frame analysis, looking for price to continue push up to get to the D extension here on the 5-minute, ultimately getting to the D extension at 107.875. All right. So those are the fibs there on the 5-minute as well. All right. So the first time drawing the fibs, stay at the bottom when the A was taken out. And this time you flip the fib to start at the top. You flip the fib when the A gets taken out. All right. The question is, how do you know when you flip the fib? When the A gets taken out, right? So you see here, right? You see here, this move down, right? It created an AB boundary, and then price pushed down and took out your A immediately, right? So here's where you'd flip the fib from the top to the bottom, right? So we can't run it off that one because these highs are almost the same. So we'll go to the next high and run it from top to bottom. And now you see here again, as price pushed to the upside, it took out your A, right? Nice AB boundary. Price moved through the zone, took out your A. So that A got taken out. So now you go to the bottom and you run your fibs off the low, right? In the direction in which price took out your A. Okay. So now this is where we are. We're moving in an upward direction now with our fib. This is our swing low. And then that's our swing. Yep. D extension hit. First swing high after the D extension is achieved. Bang. There you go. Right. Now we got price pullback and we're looking for the extension now. That makes sense, Tori? Kind of, sort of. Yeah. So I definitely want you to dig into the training, right? And walk through the training there, because ultimately it's as your A gets taken out, and we'll look at some others as we move through as well. We'll look at some of these Swiss crosses, and I'll map that out for you also. What's up? Did you have a question though? Okay. Yep. Absolutely. We'll show you some more examples. Yes. What's up, Ella? Mm-hmm.
And then also in the chat, when you said his trend line, so if the trend line broke,
So it wouldn't be considered, well, with the way the smart fib drew it here, it is, right? But remember, this is your first swing high after the D extension was achieved. So technically, this last fib would go like this. It'd be there. Then this fib will go from here to here, right? Because your B boundary is the first swing high after the D extension is achieved, right? So we got this push up here. This is your first swing high, 2 candles to the right, 2 candles to the left, right? So you go from your C, your low point, your D now is that first swing high. So this is how the fib should look, right? The algorithm with the gap got this one mixed up here, right? And that happens periodically with Smart Trader, right? So this is technically what this last fib would look like, and you have a 38.2% retracement here. Does that make sense? Okay. Yep, absolutely. Right. So if price pushed to the D extension, now we're not surprised, right? So even if we're running the smart fib, just keep in mind that this one shifted that B boundary here, right? Which changes your initial retracement here to that 236 level. Okay. So that's what we're looking at there. That's the difference. All right. And so when you're looking at the trend lines, the trend line didn't get broken here. And here's why, right? I'm going to pull these out so we can see the low. Okay. Start at your low. Yeah, it gotcha. I don't trade with it, but if you do, be consistent with it, right? And yes, if you got a trend line break, then yeah, right? Because the break of the trend line tells you what? Change in direction and momentum, right? So yeah, that could be a signal for you, right, to take the trade to the downside, right? Just continue to monitor your trade as prices move it, right? So if you get that trend line break, absolutely, right? Play the short. If that's what your rule said, take it. Yeah. Hmm. No, no. Inflation is moving down. So that means the way investors see it is if inflation is moving down, there's a potential for the Fed not to increase interest rates as high as they said that they would and as high as it's been priced into the market already, right? The market started pricing in a 50 basis point rate hike, right? So when interest rates increase, that's good for the currency, right? So if the Fed is not as hawkish as they initially said, then you'll see the currency move down and you'll see your investors be more risky with their money because money isn't as expensive as they expected it to be. That makes sense? Kind of, right? So absolutely. Absolutely. So when for businesses and borrowing money and investors, right? Investors like cheap money. Okay. And cheap money means you have a low interest rate when you have to pay that money back. So if the Fed is increasing interest rates, ultimately that's increasing the price of the money that the investors have to pay back after they borrow it. And if the Fed then starts to decrease interest rates or not increase them as much as they said they would, in this case, Fed Chair Powell said we could increase interest rates by 50 basis points come next week. If the Fed comes in at 25 basis points, investors get excited about that because money isn't as expensive and this inflation thing is starting to slow down. So that could be a signal that the Fed is going to be more dovish or slower to raise the interest rate so I can invest more and I can borrow more at still a cheaper rate than I thought I was going to be able to because they didn't go to 50 basis points on the interest rate hike, right? So investors like low interest rates because that means the money is cheap when they have to pay it back. Whereas the Currency likes, and I'm saying currency likes as it's a person, but it benefits the currency to have a higher interest rate because the government then is able to make more money because it's more expensive to pay that money that's borrowed back. Does that make sense? Right? So that's how this game is played. And because businesses don't use the money out of their pocket, they're going to borrow money to put money into future investments and research and development and all those types of things. Right? And they want that money to be as cheap as possible so that they can make their business look as valuable as possible. Right? But when businesses, when they borrow money, their interest rates are at variable rates. They don't get a fixed rate like you do on your home or on a car or something like that. So as the interest rate for the bank changes based on what the Fed sets, now the bank, so interest rates at 4.5%, right? That's the interest rate for the bank. When people borrow money, the bank then adds on additional percentage so that they can make their profit off of the money that's borrowed, right? So if the bank has an interest rate of 4.5%, say they add an additional 2% onto the interest rate for borrowers. So now the bank is loaning money at 6% instead of the 4.5% that they borrow the money at. So they're making an additional 1.5% on the money when people have to pay it back that borrow it. So when businesses then borrow the money, they have to pay it back at 6%. Now, if the Fed continues to increase those interest rates, so say they go to 5.5%, right? Now, the variable rate that the bank borrowed their money at is also going to increase because now the bank's money also increased. The bank's interest rate also increased. So that variable rate is going to change based on what the bank's interest rate is as well, right? So businesses will always have a variable rate in the money that they borrow. And so that's why they get concerned when the Fed increases those interest rates, because that means their interest rate on their money is going to change as well. So for their cost to do business has now increased. And ultimately businesses want to decrease their cost. I hope that made sense. Yeah, absolutely. Absolutely. You no, don't apologize for asking questions. Questions are that's what these sessions are for. That's what these sessions are for. So don't apologize for asking questions. Um, and then the other thing too, right, is that people have seen interest rates so low for so long, they have short memories and they don't know what it's like to have interest rates. Because on average, when looking at history, 4.5%, 5% is actually average, right? But it's been so low for so long. And I was listening to an interview the other day, and they said since the 70s, interest rates have been on a downward trajectory, right? So when we get to COVID and interest rates are basically zero, businesses are excited and they don't remember the last time that they had an interest rate of 4.5%. So now they're scared, even though this ultimately could be the new normal for a period of time, which is ultimately over time, it's average. Right. So that's the other thing too, is they got used to cheap money and being able to borrow and borrow and borrow and borrow without having to think about um, being responsible with their borrowing, as people tell individuals to be. Right. So that's the other piece to keep in mind as well. Cool deal. So that's the Euro USD. I want to take a look at some of these Swissy crosses. This CAD Swiss. This has been a fun pair to watch, fun pair to follow. We've been watching it for quite some time. We were watching it when price was ranging here in this B boundary zone, right? Actually, I'm gonna bounce back to the weekly time frame here, right? Weekly time frame, we had this range, and then price just fell off a cliff, pushed down to this monthly support level at 66026. That level is your COVID low, 2020, right? And we see what happened after that. We got price to push to the upside in a great way, right? So we came back down to that level and we're starting to get a reaction off that level again, right? So that's from a weekly time frame perspective. So now when we get to the daily, we had this range and pushed down to that level. Coincidentally, that monthly support level is in line with the 118 127 zone off of this new fib, right? So we got an 80-20 scenario here on the daily time frame at a key historical monthly support level, right? So when we see that, our eyes should light up, right? Key level in that 118 127 zone off of a shallow retracement, right? So we got 80-20 on the daily time frame. As we move to the 4 and we zoom out, we also have some confluence on the 4-hour time frame. Shallow retracement, 118 127 zone, right? So on 2 of our higher time frames, we got some key data that says, hey, we're looking for a reversal now, right? So 80-20 on the daily and the 4-hour. And we come down to the 1, that low was a fresh AB boundary, right? Fresh AB boundary. You hear Benny call it the bat signal, right? And we got the reversal off of it. And now we're creating higher highs and higher lows. Okay. So we got this push up, price came back, ranged, and then pushed to the upside again. Right. So this is after that after the CPI data came out. We got this push to the upside. Right. Now we're getting a pullback in a bit of a range. Okay. So we'll see if we get price to continue moving to the upside here. So if we run our sub fib off the low to the upside, right, we see we're just shy of that D extension there. Okay. Just shy of the D extension. So we're moving to the upside here. The other thing to note on this is this pullback here. We had a range right here, right? Top of the range, bottom of the range, top of the range, bottom of the range. We broke out. And now we're pulling back to retest that range that we broke out of, right? So now retest of that range, as long as this zone continues to hold, we're looking for price to push to the upside, which would hit that sub fib D extension. We get to this daily resistance level, right, which is a previous support level. We take out the A, right? So this is a beautiful scenario here. We got that reaction off the low. We know from a higher time frame when this 80-20 zone, we broke out of the consolidation, pulled back to retest that zone, break and retest strategy for those that have that in the trading plan. Now we're looking for a price to push to the upside. All right? You guys follow me there? So this is at a key level, and as long as this level holds, right, look for price to continue moving up. Okay? Now if we drop our cloud on, additional confirmation, we haven't broken the cloud on the 1 hour yet, right? So for those that trade off the 1 hour with the cloud, we got the bullish cloud ahead. We got our TK crossover, but price hasn't broken through the cloud yet. So be a little bit more patient here. You might get another pullback and then see if you get price to push to the upside. All right. So keep your eyes on that there. Crown pattern. Let's see. I don't think so, but let's see. Shallow crown. Yeah, shallow crown. Yeah, good eye there. Good eye there. Yep. Shallow crown pattern, right? All in line. So then, right, additional pieces of confirmation, right? Looking for price to move to the upside and pieces of data that confirm that. So now we run that fib like that. We got the crown pattern. Let's take the cloud off. Right? Just shy of a 382 here. Matching D extension is here. Right? So multiple signs on every time frame that we look at, price pushing to the upside. Right? So there's retest here, just shy of a 382. Look for price to push. When we get to this daily level is 118, 127. We'll have to watch to see what reaction we get. Right? But good eye done it. Good eye. So look for price to push to the upside there. Multiple data points. Right? So now if we come down to the 15, right? Come down to the 15 here, and we can run those fibs to the upside and continue to track price. AB boundary, 50% retracement, got some consolidation. Now we'll see if price turns over and pushes to the upside. Right? So it all falls in line with what we're looking for. Right? And now we're playing those smaller waves. You can track it on the 15, you can track it on the 1. Price moving to the upside. That daily 382. Got a question? Nope. That daily 382, Joy. Here you go. We'll bring that down to the lower time frames. All right. We'll bring that down. There you go. All right. So we back all this out so we can see price. Like so. Right. You got 357 pips to the upside there to get to that daily 382. All right. Yeah. Yeah.
So when you drew the fib and you had the crown pattern right there, you kind of did the fib, but you took it to the high.
Yep. So with your harmonic patterns only, right? The fib is measured from basically the last impulsive leg. So on the crown pattern, it goes from the center point, right, or your center tip to your right tip, to your beginning of your right tip. And now that's how you measure. And even on your other harmonic patterns, when you look at harmonic scanners and things like that, they measure the last impulsive leg, right, which ultimately is this move here, the last impulsive leg to the upside. And that's with all your harmonic patterns. When you look at harmonic scanners and things like that, you'll see the fib on that last leg, and then you'll see your take profit levels from there, your 38 to your 61.8 levels. All right, so that's how harmonic patterns are measured, and that's all of them, not just the crown. Okay, you're welcome. All right, any other questions here on this cat Swiss? No? Sweet. Beautiful setup here. Beautiful setup. So we'll continue to monitor that and see how it goes. So I took this entry here in Smart Trader, right? This is my entry here at 66390, right? And we'll continue to be able to monitor that as price moves in our favor. All right. 352. Great work, Joy. Great work. Right in the same zone. Beautiful. Let's take a look at this Euro Swiss. Take a look at this Euro Swiss. So on the daily, right? We zoom out and we take a look at this. Okay. 80-20 scenario, shallow retracement, 118 to 127 zone. We got the push to the upside. Let me take this out. We got the push to the upside here, right? We came into these daily levels of resistance here, and we started to consolidate, right? And this is ultimately our range that price has been moving in, right? We created that high, so we'll take that. And then the low of this range was down here at this weekly support level, right? You bring that all the way back here. This is where this range started. So we came back down to this weekly support level, retested, similar to that we had here, and we got this reaction off this level, right? Got the reaction off this level. So these daily levels got broken, so they're no longer valid, all right? Broke through those. We're hovering now. So now what we want to see is, do we get a retracement, right? We got this low point. We got ECB coming in on Thursday, right? So we want to see, do we get price to start to move to the upside, and does it continue to move to the upside? All right, so this is our daily look. Bottom of the range might get back to the top of the range. So come down to your 4. Got me mixed up again. Hold on. 1 hour. All right. So we got our daily. Come down to the 4. Right. And we look at this. Run the fibs off the high. Price is moving top of the range to the bottom of the range. So price is coming down. We got to this weekly support level, fresh AB boundary, and we started to get price to move to the upside. Right? So fresh AB boundary, price is pushing. We just remove these levels out off the daily time frame. So that's where we sit, right? I'm looking to see if we get a nice deep retracement here, and again, potentially get back to the top of that range. All right. So come down to the 1, and this is our look. There we go. Right. So here on the 1, we also had fresh AB boundary at that weekly support level. Right. We had a beautiful 50% retracement here, just shy of that 618. Push to the D extension. Got a swing low to form. Price came back down and started to make its way back to the upside. All right. So these levels we can also take out. And we're pressing to the upside now. Okay. So here's another scenario where we can run our sub fib to the upside and track price. Here we got a 50% retracement. Price is pushing to the upside. If we get to that D extension, we'll take out the A, and that'll be our capital fib. And our fib sequence will now be going to the upside. Right? Can you guys hear me okay?
Yes.
Okay. All right. Right? So now we're looking at fibs moving to the upside here. Okay. We had a nice retracement here, 50%. And now we're moving. Okay. So drop the cloud on here. I want to see what it looks like on the 1. Haven't fully broken through the cloud here. We broke out there, got a bullish twist ahead, right? Breaking through the cloud again here, right? So we could get another pullback here. We could stay in this consolidation for a minute and then see if we get a nice push to the upside. All right. So if we come down to our 15, we don't have a, oops, how did this keep getting changed? 15. Here we go. Come back to the high. The head of fibs running off the high and want to see where price is. Right there, right? So off that low, another fresh AB boundary, we got a reversal, right? So price is pressing to the upside here. Okay, so I'm bullish on these zeros, right? And dovish on the Swissy, right? And you see we have price break the cloud, hover through it for a bit. Then we got the strong push today, 8:45 right after the CPI data, and then price continued to rise. Now we're getting some consolidation. See if we get another push to the upside. All right. So this is another one that I'm bullish on. We got a nice break of the cloud here, right? If you trade off the 1 hour time frame with the cloud, be patient and wait for price to give you a nice bullish signal. Starting to break through now, right? But looking bullish here for price to continue to the upside, at least back to the top of the range. All right. So this wasn't an 80-20 scenario, but key level of support, right? With a hawkish ECB, right? So look for price to start to move back to the upside here. Okay. Questions on the Euro Swissy?
No.
No? All right. Cool deal. Cool deal. What's the other one that I had? And we had CAD Swiss, Euro Swiss, Dollar Swiss, Pound CAD, and Pound Aussie. And we'll take a look at these two, and then we will wrap it up. So on this pound Aussie, we've been watching this, right? And price has been pushing to the upside. We thought we might get price to turn back over, potential crown pattern. Didn't happen. Pushed back to this weekly resistance level. Still haven't gotten a 382, right? Pushed back to the weekly resistance level, got some indecision, and then price turned over and started pressing back down, right? So I'm still watching this one closely. And as long as we stay below 82,770, right, I'm looking for price to move to the downside, at least back to this previous daily level that it broke through. Okay. So I'm looking for price to come back at least here. And then if we break through this zone again, right, we can look for price to continue moving to the downside. Right. So as we move down through the time frames, here on the 4, we got a fresh AB boundary with a double top. Fresh AB boundary with a double top. Right. And then price broke down, started pushing to the downside. So again, if we stay below this weekly level, I'm looking for price to continue to move down. Okay. Come down here to the 1. And it's pretty choppy, but you see that double top clearly there. Okay. So I'm looking for that to continue to move down. 15 similar as far as the choppiness of the 1 hour. All right. So looking for a continued down movement there in favor of the Aussie, because some of those commodity currencies are starting to pick up a little bit of steam because of the upbeat sentiment of the slowing of inflation. Got it? Questions here on this pound Aussie? Nope.
No.
All righty. Take a look at this pound CAD. There we go. All right, so the pound CAD ranging a bit. That's our weekly. Don't want that one. So here on the daily, right? We got a 382 price pushed back to this previous daily level, and we couldn't stay above. So now we started pressing back down to the downside here, right? Come down to the 4. Similar to that pound Aussie, not quite a double top, right? Tried to push higher into that 118, 127 zone, failed, started pressing down, right? So as we move down through time frames for the 1 hour, this is the one that we posted. Benny posted in the Discord, right? Here's our AB boundary, 118, 127 zone, right? We thought price was broke that daily level. We thought price was going to head to the D extension, but it turned back over, and now it's pressing down to the downside. Okay, so we got our TP1 here at 164,702, and our TP2 at 163,877. Okay, so looking for price to continue to press to the downside here. As long as it stays below that previous daily resistance level here, right, you see price continue moving down. So this 80-20 scenario that we posted is still in play, right? And this is where those wide stops, right, are beneficial, allowing price to have some of these erratic moves. Still keeps you in the game, right? Yeah, you trade smaller, but it allows you to add to that trade as price moves in your favor. All right, so that's what we're looking at there on this pound CAD. I know oil pushed down, right, and lost 5%, but we could still see this continue to move into the downside, at least in the short term. Okay. Questions on this pound CAD? Anybody still in this play? Joy? Yeah. Say it again.
No, but I think that when it pulls back,
Gotcha. You get stopped out on the push to the upside?
Yes.
Yeah, I did too originally. Yeah. I had a tighter stop on this one. And I did get stopped out once price turned over and broke below the level. I took a re-entry on it. So I'm with you. I'm with you. I'm with you. All right. So we'll continue to monitor that. Right. And you can drop down to the 15 and run your sub fibs off the high to look for that pullback opportunity. All right. We actually got a 786 here, and now we're ranging. All right. So see if we get another push to the upside before price turns over. But moving down. Okay. Use the 4-hour D extension for your stop. Up here, Joy, at 170. Gotcha. That's beautiful. That's beautiful. I love it. I love it. Allow price to do what it's going to do, right? Because even here on that 4 hour, that 118, 127 comes in line with the weekly and daily resistance level, right? Right.
But when Benny called it, I had already sold on the 4 hours, so
Ah, okay.
that's what my plan was. And both of them was the same, so I was like, well, I can stay right here.
Yeah, yeah, yeah. Absolutely, right. And we posted in the newsletter too, right? So if you didn't see the post in the Discord, it was also in the newsletter, right? That 1 hour setup there. All right. So, and that's good work, Joy. Right? You've been killing it. You've been killing it. Great work. So,
I hate to say this word, I'm trying.
hey, you're doing it though. You're doing it, right? You're taking action. You're following your trading plan, and you're taking one step at a time. That's what it's about. That's what it's about. All right, one step at a time. 1% better every day. So that's all I got for us today, good people. Any questions on anything that we covered? No. All right, cool deal. Well, Benny will be back at it tomorrow morning, 6:30 a.m. Eastern Standard Time for our pre-New York session. Definitely tap in and join us. We'll see what happens overnight and get prepared for the day ahead with those core retail sales numbers. Until then, have a good evening, good morning for some. On the other side of the world, we appreciate you joining late night. We'll see you in the morning. Peace. You're welcome. You're welcome. Good night.